First of all, what's salary sacrifice? Well, this is where your employer contributes to a registered pension scheme and therefore no employment income tax or national insurance contributions are charged to the employee. The full amount would be invested in the pension fund. The tax announcements made in September 21 are going to have a big impact on a lot of people. The temporary increase in national insurance rates for the 2022-23 tax year are going to be followed by the permanent introduction of the new health and social care levy in 23-24. And this will hit take-home pay for millions. And don't forget, there's also an increase to all dividend tax rates from April 2022. The allowance for income taxes have been frozen for the next 5 years. One small piece of good news for taxpayers is that the national insurance limits and thresholds will increase for 2022-23. And this rise does not include the upper earnings and the upper profits limits, which will stay at the current levels in line with the higher rate threshold for income tax. Based on September's CPI figure of 3.1%, this means that the lower earnings limit will rise from £9,568 to £9,880. And this should help to slightly soften the blow of the 1.25% percent point increase for the employers, and the self-employed are going to have to pay. So what has this got to do with salary sacrifice? Well, frozen income tax allowances and increased national insurance makes the option of salary sacrifice as a way to fund your pension way more appealing. You could just say that it's just got supercharged. Let's just look at the position for employers first. Employers pay Class 1 national insurance contributions, known as secondary contributions, at a rate of 15.05% on the earnings of each employee earning more than the secondary threshold. The secondary threshold is £9,100 a year or £175 a week for the 22-23 tax year. This means an employer can make a saving of 15.05% on all contributions at this level of earnings. So for someone making a £40,000 contribution out of earnings above the threshold, this saves the employer £6,020. The employer could, of course, pass some or all of this saving onto the employee if they choose, which would boost their pension contributions even further. The employee also pays national insurance at a rate of 13.25% on their earnings between the primary threshold of £9,880 and the upper earnings limit of £50,270. By making this £40,000 pension contribution via salary sacrifice, they could save up to £5,300 in national insurance contributions. That's a whole lot of NI savings for both employee and employer if you're able to make pension contributions via salary sacrifice. I mentioned earlier that the new health and social care levy will be introduced from 23-24 as a permanent replacement for the temporary increase in the national insurance rates. Salary sacrifice will continue to be effective in reducing this liability, in the same way it reduces the liability for NI contributions. If you still work and are above state pension age, you will be eligible for the new health and social care levy in 22-24. Even though you don't pay national insurance, although your employers do have to pay NI. So for these older workers who don't pay NI, there is currently no tax advantage to salary sacrifice over making personal contributions unless your employer passes on some of their savings to you. And this is going to change from April 23, when salary sacrifice will look the more attractive option for this group of workers too. As both the employee and the employer are subject to the health and social care levy, the total savings will be 2.5% on earnings above the threshold in addition to the employer's NI savings. Finally, let's not forget that we have the increase to the dividend tax rates from April 2022 from the 7.5%, 32.5% and 38.1% to 8.75%, 33.75% and 39.35% respectively. That's a whopping 16% increase on the basic rate. And this is another boost to the case for making contributions via salary sacrifice to your pension. Think about investing your money into your pension so that you avoid the dividend tax hike. Now, there have been some fears that there could have been some tinkering with the salary sacrifice rules for pension contributions, as they are becoming almost too attractive. But for now, salary sacrifice remains a very attractive option for many people. Thanks for checking out my YouTube channel. I'm Justin King. I'm a chartered and certified financial planner, and my aim is to help people live successful lives. And that often involves understanding your money. I hope you've enjoyed this video. If you have, please press the like button to help more people like you find my channel, and subscribe so you never miss an episode. For now, I'm Justin King, helping you live your best life.